XRP is on the brink of a significant transformation, evolving from a mere speculative token into a vital asset for institutional finance. The year 2025 is set to be a game changer for XRP, driven by three key factors: the conclusion of the SEC versus Ripple legal dispute, the rapid adoption of XRP in real-world cross-border payment systems, and the development of robust institutional frameworks, including custody solutions and exchange-traded funds, ETFs. These elements are collectively reshaping the perception of XRP, enhancing its value proposition and revealing its long-term investment potential. Regulatory clarity, establishing a legal framework for institutional trust. In August 2025, the U.S. Court of Appeals for the Second Circuit made a landmark decision by dismissing the SEC's case against Ripple. This ruling has provided XRP with a crucial legal foundation, confirming that XRP is not classified as a security in secondary market transactions. This verdict has alleviated a significant regulatory burden that had previously discouraged institutional investors from engaging with XRP. Moreover, it has introduced a more nuanced approach to token classification, highlighting the importance of context in the application of the Howey test. As a result, XRP is now recognized as a digital commodity in public markets, placing it alongside Bitcoin and Ethereum in terms of regulatory clarity. The ramifications of this ruling are substantial. Following the announcement, XRP's value surged by 7%, reaching $3, and its market capitalization exceeded $180 billion. Institutional investors, who had previously been cautious due to the risks associated with ongoing litigation, are now actively seeking XRP-based investment products. Notably, 7 prominent asset management firms, Bitwise, Canary Capital, CoinShares, Franklin Templeton, 21 Shares, WisdomTree, and Grayscale have submitted proposals for XRP ETFs. These proposals are designed to address the SEC's past concerns regarding liquidity, custody, and investor protection, with a decision anticipated between October 18th and 23rd, 2025. Real-world adoption: XRP as a key asset in global financial transactions. XRP's functionality extends well beyond speculative trading. It has established itself as a bridge asset in international payments. This has been validated through partnerships with major financial institutions such as Santander, SBI Holdings, Standard Chartered, and Union Bank, all of which have adopted Ripple's on-demand liquidity (ODL) service. This service has proven to reduce remittance costs by as much as 70% and has significantly shortened settlement times from several days to mere seconds. For instance, Union Bank in the Philippines now provides real-time remittance services for migrant workers, utilizing XRP to circumvent the inefficiencies of traditional correspondent banking systems. These practical applications highlight XRP's compelling value proposition. It offers low-cost, high-speed transactions that effectively address real-world liquidity challenges. With over 300 financial institutions leveraging Ripple's ODL service, XRP has transitioned from being a speculative asset to a crucial component of financial infrastructure. Additionally, Ripple's stablecoin Ripple USD, RLUSD, which is fully backed by dollar reserves and issued under a New York Trust Company charter, further enhances XRP's utility in terms of tokenization and liquidity management. Institutional infrastructure, building the framework for market readiness. The final piece of the puzzle for XRP's institutional acceptance lies in the establishment of a solid infrastructure. Ripple's custody platform is designed to meet stringent operational and compliance standards, offering API integration, anti-money laundering AML tools, and programmable features for tokenized assets. This aligns with the Blockchain Association Singapore's report on best practices, which emphasizes the importance of compliance by design and operational resilience in the management of digital assets. At the same time, the competition to launch XRP ETFs is intensifying. 21 shares has already filed for its XRP ETF in Delaware, a jurisdiction known for its favorable business regulations. If approved, these ETFs could potentially attract between $5 billion and $8 billion in institutional investments, similar to the $25 billion influx that Bitcoin ETFs experienced in 2024. The SEC's recent formation of a crypto task force further indicates a shift towards a more balanced regulatory approach that seeks to foster innovation while ensuring investor protection. Investment thesis: a convergence of influential factors. For investors, XRP's evolution presents a unique opportunity. The combination of legal clarity, practical utility, and institutional infrastructure creates a self-reinforcing cycle. Increased regulatory confidence leads to greater institutional adoption, which in turn drives demand and enhances price appreciation. Analysts predict that XRP could reach values between $3.60 and $5.53 by the end of the year, depending on the outcomes of ETF approvals and broader economic conditions. However, potential risks remain. The SEC could still challenge other cryptocurrencies or revisit the Ripple case, although both parties have currently chosen not to pursue further legal action. Additionally, macroeconomic factors such as interest rates and global liquidity will play a significant role in determining XRP's market performance. Conclusion: entering a new era for XRP. XRP's transformation from a speculative token to an institutional-grade utility asset is now firmly underway. The regulatory resolution achieved in 2025 has paved the way for wider adoption, while real-world partnerships and advancements in infrastructure have solidified XRP's position in the global financial landscape. For investors, this moment represents a rare convergence of legal, technological, and market-driven catalysts. As the SEC prepares to make a ruling on XRP ETFs in October, the token stands on the brink of a new chapter, one where its value is anchored not in speculation, but in genuine utility and institutional demand.